Is this video podcast or audio?
Both video and audio.
Okay, got it. Then I'll
All
leave my
right.
video on.
All right, guys, we're back again with another great episode of PFREI. I'm your host, Fuquan Bilal. Today we have a great episode. I don't want to screw your last name up, Ken. You just told me what it is. It's Ken
Majmudar,
Majmudar.
right?
Ken Majmudar. That's awesome. Majmudar.
It's actually much more intimidating looking than it actually is if you follow like the third grade teacher's advice of like take each syllable and sound it out.
Yeah.
But most
Welcome,
people just look at it and they're like, I give up.
welcome to the show, man. I really appreciate you coming on. I know we tried to
Thank
connect
you.
weeks ago. You were off to Paris, and
Yes.
you were able to circle back and connect. But I wanted to bring you on to introduce you to my audience, to kind of speak more on a higher level on, some of the stuff with fund management. I
Sure.
know you do some fund management stuff, and I haven't really. I'm trying to think if I had other fund managers on the call. I think this may be the first. Usually I have guys who are active, maybe doing wholesaling, fix and flips, multifamily,
Right. Yeah.
senior home living. I don't think I've ever interviewed a fund manager. So, yeah, how did you get into that? What made you? Let's give the audience some background. Like, you didn't just become a fund manager. You were doing something else.
No, yeah, that's true. So yeah, go way back. I grew up in New Jersey. I grew up in Jersey City. So I came here when I was 5 years old. I'm an immigrant. My parents moved here for a better life for themselves and for me and my sister. So I was 5. She was probably 3. And we came to Jersey City and we lived in a 1-bedroom tenement, and then like another tenement. So that was probably like 1974. And but it's like one of the great things about America, right? Maybe it might be a little different today, but not entirely. For our real estate audience, that I think it was 1979. So 5 years later, my dad was able to buy a 2-family house in Jersey City on Nelson Avenue, where I grew up. And he still owns that house. He doesn't live there anymore, but it's rented out. It's paid off, and he generates some rental income that's part of his retirement income. He didn't build like a real estate empire, but he has that one house, and it's paid off, and it gives him cash flow. I think actually, if I recall, that he paid under $50,000 for that house. We lived in it for the whole time through college. I even lived there with them for the first 2 years of college. The first 2 years of working after law school to save money. So from 94 to 96, and had my mom's food, had help doing the laundry, and saving probably, I don't know, 60% of a pretty good salary. And then I ended up actually buying my own place in New York City. Until recently, until a couple of years ago, I'd never lived in a rented place other than dorms. But like a couple of years ago, a house I was building had a bad contractor, and I won't even talk about all that, but ended up having to rent for a year in between. I sold the house and moved into the new one. So so I'm a Jersey person, and I guess I've been very fortunate in my life. But before I started doing what I'm doing now, which includes fund management, I was an investment banker. So I graduated Harvard Law School. I was an investment banker for 7 years. So I learned sort of corporate finance, M&A. I worked with companies that probably people have heard of, Garmin in particular, and DirecTV. So DirecTV, I ended up being an investment banker helping to sell DirecTV from one owner to another, a multi-billion-dollar transaction. And then Sirius Satellite Radio, we were involved in like the whole business plan starting from scratch. And Garmin, I took them public. So those kinds of companies, I worked on that kind of stuff for 7 years. So learned sort of finance from the high level Wall Street, C-suite, boardroom kind of stuff. And then I kind of went the other way, where I was like, hey, I'm very entrepreneurial and I want to do something that I could do and start on my own. I didn't know anything about real estate, house flipping or anything like that. I was in a completely different world. And so I was trying to think, like, what could I do that I would love and that I could do, kind of starting just me. And I'd always loved investing and investment management. So I said, hey, I could do that. And I just sort of more or less hung out my shingle and looked for, my first clients. Fortunately, a couple of relatives were willing to, trust me to help them. And it just kind of went from there. So still a work in progress, but I've been at it for a couple of decades now.
That's awesome. So you said you wanted to try out real estate. Why are you passionate about it? I don't know if that's the right word, but why real estate?
Well, I'm an investor in real estate now. I've always been. I come from India, and so real estate is something that real estate is one of the original sort of asset classes, right? I mean, everybody needs sort of food, clothing, shelter. But the world wasn't like as sophisticated as it's become. So a lot of what I deal with now is not only real estate, but other investments like in the stock market or other things. And those are intangible, right? But real estate's tangible. It's an asset, just like there's a piece of land, there's a building on it. You can touch it, you can see it, you can feel it. And so it's always been there that, like, growing up, I was always fascinated with spaces and houses and things and wealth in general. So real estate is one of those core pillars. It's a lot more accessible to, I think, a lot more people, right? Subsequently, obviously, I learned about investing in stocks, originally by studying folks like Warren Buffett and his mentors. That's a game that is more intangible, and it's more complicated than at least the basics of real estate. So I think, but a lot of people have made a lot of money in real estate. A lot of people have made a lot of money in stocks and businesses and, other things too. But I just like investing in general, and real estate's one of the big things you can invest in.
Awesome. Let's talk about the fund setup. I mean, you learned from where you were on the structure and how to set it up, and a lot of people want to become a fund manager. I mean, it for me, it wasn't something I wanted to become a fund manager. I just wanted to create a vehicle for other people to partner with me on. But I quickly learned that it's not as easy as it sounds. There's a lot of challenges. I always relate it to like having kids, right? A fund is like having kids. You have the good, bad, and the ugly. There's a lot of compliance that's there.
Sure.
And what you need to do as far as communication with your investors, transparency, a lot of that. So talk about some of the challenges you've had, because I'm pretty sure it wasn't easy. And then, some of the successes that you've had on this journey.
Yeah, well, so I didn't start off as a fund manager when I originally left my sort of investment banking corporate job. I was like, what can I do? And I could have started a fund right then. I sort of generally knew how funds work, but not the specifics of like how you actually set them up and what's involved in running them and all that. But I had role models who were sort of hedge fund managers who started a hedge fund and then were investing in the public markets. My original thing was I was going to invest in stocks. So that was where I started. Having studied Warren Buffett and his principles, they really resonated with me. As an aside, if folks haven't read like his letters, which are freely available on their website, berkshirehathaway.com, then that's worth doing because it's just a great business education, just like read his letters from beginning to end, or even any of them if you don't have time to read them all. But yeah, so I had initially said I want to invest in public markets. And so there's basically, as I saw it, two ways to do it if I was going to help other people invest. And so one is a fund. You start a fund and then you bring people into the fund. And the other one is what I started doing first, and then I added funds later, which is separately managed accounts. So that's where I started. So I said, instead of bringing people into a fund, I'll just help them manage their own money in accounts that custodians hold. And that way they'll have transparency and visibility into their funds and what I'm doing with them. And that's a more comfortable thing to offer somebody when you're starting out than saying, hey, give it to me, I'll control it. In a fund, you won't know what it is until I report it to you, There's pros and cons to both. But that's kind of the decision I originally made. And so I started helping people manage their accounts. So it'd be like you have an account, it could be an IRA account or a taxable joint account or an individual account or whatever type of account you have, a trust account, a corporate account. You want help for someone to help you manage that and do it for you. And so that's what I started doing. And then I would, obviously charge something for the services that I'm providing. And most of the money that I would make based on my research and my understanding would go to the client, but I would charge a fee that covers my costs and allows me to make a living while I do this work. So it was later on, I would say it was probably a few years into it, probably 3 or 4 years, that I was like, okay, now I've got my base of clients with separate accounts, and I'm gonna create. I think I created actually a couple of funds back then to do certain strategies that are not as easy to do in separately managed accounts. Because in separately managed accounts, you can do publicly traded stocks, publicly traded securities, but if you're going to do anything that isn't publicly traded, obviously that you can't do very easily in separate accounts. And then even stuff where it is publicly traded, if you want to do it a certain way or get paid a performance-based fee or whatever, it's just sort of easier to do within a fund structure. So it was a few years in, I already had a base of clients, and I came up with a strategy that I wanted to do with a fund. And then that's when I kind of learned the details of how you do it, which is, creating the fund documents and figuring out whether you have to register the fund or it's going to be an unregistered fund. And then obviously, this was the other things. I knew that if you do a fund, it's only limited to, at the time, it was accredited investors and for me as an RIA, qualified clients. And so that was a higher, bar that you had to meet. But at that point, I would say about 3 years in, I started a fund, and later I started multiple funds. So we started a real estate strategy. We started a private debt fund, a real estate equity fund. And then we have a couple other funds, not all of which I personally run. We have a micro cap fund that invests in very small illiquid companies. Those are 3 of maybe 4 or 5 funds that my company, Ridgewood Investments, manages today.
That's awesome, man. Yeah. So if you had to start all over again, where would you start?
What's that?
If you had to start all over again, where would you start?
I would probably still do it the way I did it. But for the reasons I explained. One other good thing with the managed account structure is you manage these accounts. There's many of them, and you have these relationships with the clients where you're giving them advice and things. So it's stickier as a relationship. And you're able to provide value in multiple ways. With a fund, you typically have, like, say, one fund and it's in one strategy, and if that strategy doesn't go well, it's going to be hard to get another fund going.
Absolutely, absolutely. Yeah, I mean, this is great information, man. I know when we first met at a mastermind, we had several conversations. I learned some things from you, and I like how inquisitive you were with the real estate world, and joining the mastermind kind of got you speed access to some strategic partnerships and things of that nature. So
absolutely.
Are you doing any strategic partnerships? Talk a little bit about what that looked like, from a fund manager perspective on
Sure
how you can earn investors a return.
Well, when you say strategic partnerships, are you saying with other, like, real estate?
With other investors, like we've spoken some time and said, hey, if you find a deal, if there's some alignment there, we'll.
Oh, sure. Yeah.
Venture something, and
Yeah. So as a fund manager, essentially, you're an intermediary, right? So, like, your LPs, your investors who have money, are trusting you to deploy their capital for them in an intelligent way. And obviously, having a fund, you have some costs. You also, you don't work for free, so you want to make something if you do a good job. So obviously, the idea is, okay, well, anyone in your fund, they have so many options of things they could do with their money. They could leave it in a bank, or they could put it into the stock market, or they could do whatever. They could put it into real estate themselves. But for whatever reason, with all their choices, they've trusted you, and they've come to you to say, hey, here's my capital. You decide and you invest it, and I'll pay you based on what both the work you're doing and hopefully also, if you do a really good job, then some share of the positive returns that you generate. So to get to that point where you can credibly go to somebody and say, hey, I have something that you I think will like and trust. I think takes some time and experience if you're dealing with anyone that is sort of sophisticated. And then there's the question of, okay, what do you want to be good at, right? Like, say you're really good at real estate, and you can't be good at real estate in the whole country, but you could be good at real estate in your niche, whatever that may be. It could be single family fix and flips, or it could be wholesaling, probably within an area. Or maybe you focus on smaller multifamilies or bigger multifamilies or whatever the case may be. So most entrepreneurs, and that includes like entrepreneurs who start companies or entrepreneurs who do real estate deals or whatever, at some point, like you'll get past the amount of capital that you have access to. In other words, you get into a situation where you have more opportunities than you have capital to take advantage of those opportunities. And that is exactly the point where you reach out to outside capital sources. And so if what most people will do initially is they'll try to get loans from banks. That would be the way, but banks are slow, and real estate deals, you generally don't have that much time. They're slow and they're extremely structured. Like if it doesn't fit into exactly these check marks, then sorry, we can't help you. So then you have private money, and that can be from individuals, but many times it's funds that they've deployed individual money together or institutional money. And so I'm kind of one of those people. I'm one of those people that created a fund or funds, and I try to look to put that money to work. And because of the relationships that you could make within the mastermind, there's obviously been folks in the mastermind that have come to me with opportunities that we talked about, and I thought, okay, you know what, they're good. And so I ended up structuring something where there was a benefit to them and a benefit to my clients and some benefit to me as well. I should mention that, and I get asked this a lot of people don't really understand this. So people come to me all the time with kind of like deals. But I would say a lot of people are like me, not everybody. My sort of underwriting process, and if that's not clear what that is, I'll be happy to elaborate, is it actually is first people. So it's like, who am I dealing with? Do I know them? Do I know how they think? Do I understand their experience and track record? Do I trust them, et cetera? And that takes time usually to build. It's not instantaneous. So it's people first, and then the deal is second, and the structure is third, right? So I look for great people. I have had this happen where I've had what seemed like a great deal, but a person that I just wasn't sure was a great person, or I just didn't know. Even, I would think like maybe they're a great person, but I just don't know. And I would generally not do the deal. And then sometimes you have a great person and a great deal, but the structure, there's not a meeting of the minds in terms of what the structure should be, or there's not enough meat on the bone for my investors after everything that we do and bring. So that's also a no. But when the person and the deal and the structure all work, then that's when we end up doing sort of strategic deals or partnerships with folks. Also because we're kind of people focused and we're relationship focused. So we usually end up doing multiple things with the same people, rather than one-offs and then like moving on. That would be our preference. Yeah.
Makes sense. Let the audience know how they can reach out to you and get in contact with you if they're interested in investing with you or possibly partner up on a deal with you.
Sure. So I run a firm called Ridgewood Investments, and my email is ken@ridgewoodinvestments.com. But yeah, if you are like the type of person you just have money and you want advice, or you want to do smarter things with your money potentially, or have someone explain to you the different options and teach you and kind of guide you, that would be my ridgewoodinvestments.com website, where you can take a look at it. Our tagline, I think it's on there, is knowledge creates more wealth than dollars.
I love it.
And I really believe in that. And then if you're like a deal person or you're an operating person, and you're looking for capital, same email address. You can just reach out and let me know. Usually, as I mentioned, like sometimes people reach out to me like they've tried everything else and now they're like got a week left, and it's like, can you fund the deal? And the answer is no. I don't even need to know.
Yeah,
I don't know you. You never contacted me. I don't know anything about the deal, and you have a gun to your head. No,
yeah,
right?
yeah.
But if you're willing to sort of, build a relationship and be patient, then it can be a good fit.
That's awesome, man. I appreciate you coming on the show and adding value. Another great episode of PFREI. I'm your host, Fuquan Bilal. You can catch us on YouTube, any social media channel where you can find your favorite podcast.
Oh, one thing I wanted to add, Fuquan.
Absolutely. What you
So
got?
I'm much more active on socials. So if folks are listening and they want to sort of just learn more about just various things, I have a lot of like eclectic interests. My Instagram is Ken Majmudar. So follow me on there, or my YouTube channel, which is called Investing with Ken Majmudar. And I have some videos on there about sort of investing and just different topics like around that.
Make sure you guys go check it out. Thanks for coming to the show, man. I really appreciate it.
Thank you, Fuquan.